Women are nearly 2 times more likely than men to describe their investing knowledge as non-existent. That's from a Fidelity study. I'm going to help you change that so that you can start building wealth in the stock market with confidence today. If you've been wondering how to start investing in the stock market, I'm here to show you. If you've been wondering how to get started in the stock market, this is for you. So by the end of this video, you're going to learn 3 key things. Who should be investing in the stock market, how to understand and handle the risk so that you can invest with confidence, and the exact steps for opening your first investment account so that you can get started right away. So I want to begin by saying that investing is not just for the well-educated or the wealthy. You can start small and learn as you go. I learned that firsthand. So back when I was in college, I was working at Walgreens. And one of my managers, this middle-aged Black auntie, she pulled me aside and said I need to start investing. Now, I had no clue what I was doing, but I opened an account with ShareBuilder anyway. I put a little bit of money here and there. And honestly, I treated it more like hiding money from myself so that I wouldn't spend it. So that first step, even though I knew nothing about investing, set me on a path to long-term investing success. If I could start knowing nothing, I know you can too. Because time in the market is always more important than timing the market. Compound growth is like a snowball running downhill. The earlier you start, the more time it has to build momentum. Imagine 2 people. One starts today investing $200 a month, and the other waits 10 years to start investing the same amount. Even if they both earn the same return, the one who started today could have tens of thousands more at retirement just from getting in earlier. I personally am so glad I got started early, even when I didn't fully understand what I was doing back then. So who should invest in the stock market? In my opinion, pretty much anyone who has an income and can spare a few dollars. You don't need to be rich and you don't need a fancy finance degree. The key is investing money you won't need for at least 5 years because that helps you ride out the market when it goes up and down. So you don't have to stress about needing money in a down market and panic selling. So now, is investing risky? Honestly, not. We're not concerned so much about when the market goes down. Yes, that can and will happen, but it's more how you behave when the market goes down. Earlier this year, a lot of us witnessed this. When everyone's retirement accounts took a tumble, a lot of people had stopped contributing or wanted to take their money out of the stock market. The people who sell their stocks in a down market, that's when you actually lose money. Meanwhile, the people who stayed in, they saw rapid growth soon thereafter. So if you want more reassurance, you can see this for yourself. If you look at a chart, something like VTSAX, which covers the total stock market for the United States, you'll see plenty of dips, some small, some big. But if you zoom out over 10 to 20 years, those dips turn into tiny little bumps on an upward climb. And that's the power of staying invested for the long haul. You can manage risk by diversifying your investments, starting with amounts that you're comfortable with, and staying consistent no matter what the market is doing. So here's how you're going to open an investment account. If you have a workplace retirement plan available to you, like a 401k, 403b, start there. Your contributions come right out your paycheck and they get invested automatically. But make sure it gets invested. Make sure it's not staying in cash. If you don't have a work retirement plan, you can open an IRA, an individual retirement account. There are 2 types, a Roth or traditional. Contributing to a Roth lets you grow your money tax-free so that when you go take out the money later, you don't get charged taxes on it, while a traditional IRA gives you a tax break today. Once you've maxed those options out, then you can move on to contributing to a taxable brokerage account. The process is simple. First, you're going to enter your personal information. Then you're going to link your bank account so that you can transfer money from your bank account to your investment account. And then 3, you're going to choose what you're going to invest in. Now, if you're a beginner, you want to keep your investments simple. Look for something that's already diversified, like a total stock market index fund or ETF. And here's a big one. You don't want to just open the account and you don't want to just even put money in it. You have to make sure it's actually invested, meaning you want to make a purchase of whatever fund that you choose. If all this is overwhelming, I don't want you to get stressed out. It's just important that you get started. So now that you know how to open the account and how to choose your first investment, that's great. It's a great start, but it's a start. The more you learn, the easier it is to make money decisions that you can feel very confident about. I've got plenty of other videos waiting for you on my channel that'll help you continue building that confidence and your wealth. So after this, check out this one and keep going on this learning journey. You've got this.